Okay, hello accounting students. I know you are all just as disappointed as I was to find out that our Class Connect program is down for today. I was so bummed because I was so looking forward to seeing some of you again and just getting to chat, because Class Connects are my favorite time to just kind of chat with you guys. But anyways, since that program is down for today, I decided to go ahead. I was worried that some of you might be having some trouble with these assignments, so I really wanted to go ahead and put something together for you that you could refer to for help on these upcoming assignments for the week. So I wanted to just go through the PowerPoint with you and then also take a look at some of our assignments. First, I wanted to clarify some things with grading your last assignments. Make sure that when you're naming accounts, you're not just calling an account, okay, this is an asset account, all right? You have to tell me what type of asset account it is. And that could be, we talked about, there's cash, a cash account, cash in bank, those are both asset accounts. Materials, equipment, accounts receivable, property, anything we own is an asset account. So you have to name your account, your asset account, as something, okay? You can't just say, oh, it's an asset. Tell me what type of asset, all right? Same with liability and owner's equity. Okay, liability, they don't even have near as many options. Liability is usually either an accounts payable and then the name of the company, or bills payable. And then owner's equity is often referred to as the company name plus capital, so maybe like Dan's Trucking Capital or whatever. Or the temporary accounts, revenue, expenses, withdrawal, those all need names too. So maybe it's sales revenue, maybe it's utilities expenses, maybe, and then it's usually like owner's withdrawal, okay? So make sure you're just naming your accounts. Then I do want to remind you that just always remember, if one account is debited, another account is credited, okay? That's why it's called the double entry system. And make sure you check out that video I posted in our announcements, because that can definitely help clarify the debit-credit mystery. And then when we're looking at accounts payable and accounts receivable, I think some of you guys were confused with some of the transactions. So, for instance, if you see a transaction that says Mr. Jones paid $500 towards his office furniture that he purchased a month ago, okay? So some of you would maybe say, okay, well, this would decrease our cash and increase our office furniture. Well, in this instance, the office furniture was bought a month ago, okay? So we already have our office furniture. That account has already been increased. Now we are making a payment on our office furniture, okay? So that means that our cash is going to decrease because we're making a payment. And then what account also decreases as we make this payment? Yes, it's an accounts payable will decrease, all right? So our cash is going to get credited, our accounts payable is going to get debited with this $500, all right? Same if someone's paying us. Mrs. Ida received a check for $200 for party supplies that she sold. Okay, party supplies that she had sold. So these have already been sold. That part's already been taken care of. She's just now receiving a payment towards those party supplies. So this payment is going to, yes, increase our cash by $200 and then also decrease our accounts receivable. Okay, so cash will be debited $100 or $200, and then accounts receivable would be credited $200. Okay? And then again, really check out that video on debits and credits that I sent out. I was going to have you guys watch it again today if you hadn't seen it. It just really helps to clarify some things. Okay, so today we're really looking more into the ledger accounts and the trial balance. All right, so this for Part 1 of Assignment 4, it's really nothing new for you guys, or it shouldn't be, okay? The only thing they did was add in some account numbers for you to work with. So we're going to look at this now. Let's get into templates. We're looking at Assignment 4 Part 1. Okay, so I don't think we've worked with account numbers before, all right? So they're giving us account numbers to work with. So this says Rex Consulting Services opened his business in January 2005, and the following are their ledger accounts. Okay, and then it tells us the transactions that took place during January. So this is what we're going to be copying down to T accounts in the ledger. All right, so the first one I did for you, okay, the very first transaction is up here in January 15th, and I should put the dates next to these. On January 15th, there was an investment of $50,000 of capital. Okay, so I wrote down my analysis here. The accounts that are going to be affected in this transaction would be capital stock and cash. Okay, that's usually always our first, when they talk about a business that's just getting started, that's usually always the first type of transaction that occurs. Okay, so that's going to affect our stock, our capital